While it's a holiday shortened trading week because of the 4th of July, it has been action packed and we've only been in this for one day. The market has made some very interesting moves across a number of areas of the market, and we're going to take a look at them here today. And the first thing we're going to do is start with the U.S. dollar. The U.S. dollar saw a huge push up here on Tuesday. Why? It looks to be that flight to safety, right? Yes, the dollar is broken over that 103 level, and we've talked about this a lot as an important zone, and it keeps pushing. But the reason that we saw that big push yesterday, flight to safety. Market seems to be pricing in a recession pretty clearly here across the board. Oil yesterday was down 10%. It's back underneath of $100 a barrel. You've got copper, which we always look at from a building material standpoint, has basically slid from 460 all the way to that major multi-year level of potential support at 330 here, right? Signaling a contraction of growth, building, demand for oil, travel, things of that nature. The market's starting to price that in. Now, when we typically tend to see flights to safety, we also tend to see bonds do extremely well. We go back and we take a look at 2020. Here's that push up in bonds. The 30-year bond went up 20% during that pandemic initial move lower. And bonds, we've talked about this a lot, they've been off to the worst start of the year in history by a wide margin in that raising rate environment that we've gotten. But over the last couple of weeks, bonds have stopped falling, and they stopped falling right, the 30-year bond stopped falling right at that major level of support that we talked about going all the way back to 2014. That's the area that it's held. When we take a look at this monthly candle, you got a hammer candle and a potential follow through here so far in July, right? Why? The market is starting to price in rate decreases next year, right? They think, the bond market thinks, that we are going to run into an economic recession, and the Fed is going to have to change course. If the Fed changes course, they're going to start cutting rates again, and that should make bond prices go up. And interestingly enough, we're seeing the worst area of the market, the growth area that has been absolutely decimated here over the last year or so, stop making new lows and giving us positive divergence, right? The ARK fund made its low in the beginning of May, put a higher low in the beginning of June, and it's put another higher low in at the end of June, and has started to push up. If you couple that and take a look at that against the S&P 500, the S&P 500 clearly made lower lows during that time. We are seeing rotation potentially back from value into growth on the idea that interest rates are no longer going to keep rising, but are going to fall. And we're seeing the biotechs, especially the smaller biotech company, the ETF XBI, potentially getting back up over this important zone of 80, right? We had that breakdown. We have that potential W bottom being put in here in biotech. If we take a look at the big biotechs, IBB, it's showing the same kind of thing where we could potentially have put in that bottom. Now, there is a ton of work on these charts that still needs to be done in order to prove anything. The big biotechs, IBB, has to get back up over 136 to make a higher high, right? But this is the first sign of constructive behavior. We had a potential area of support that broke down. It acted as resistance here and here and here, and now it's breaking to the upside. What was once support becomes resistance. A lot of times you'll see this now act as support and that type of potential price action. It's only one day. One day does not make a trend when I'm talking about oil and the dollar with those huge breakouts that we've seen here over the last couple of sessions. But we've got some stuff that's been brewing under the surface here for a month or two, starting to signal that potentially oil, that commodity area of the market, is going to come under a little bit more pressure here moving forward, and the area that had led us lower might have a little bit less pressure sitting on top of it. We're going to stay up to date and continue to pay very close to these trends. It's really, really important because these would be some big changes for us if these trends were continued to follow through. Hope you guys have yourselves a fantastic day. We will see you all next day. Take care.